Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 20th of January. The fact that the latest round of negotiations between the US and China has resulted in a signing of the Phase 1 agreement has been well received by markets. On the other hand, the rather trickier Phase 2 agreement will, over the next few months, become somewhat the focus of events. Nonetheless, it's early days to be talking about markets rising or falling, but there has been some positive move from all of the main indices. The FTSE 100 in the year to date is up about 1.5%. Both the Dow Jones and the S&P 500 are up about 2.7%, and already the Nasdaq is up by over 4%. In terms of next week, there's a fair bit going on and a few things to look out for. The US markets will be closed on Monday for Martin Luther King Day. Later on in the week, there's the latest ECB interest rate decision, and also later in the week, the World Economic Forum, the annual get-together in Davos, Switzerland, will be taking place. On the company front, the US market starts to get into second gear. We've got updates to be expected from the likes of Netflix, IBM, Johnson & Johnson and American Express. And equally, there's some stocks of interest in the UK next week to keep an eye out for in the terms of trading statements. First one's easyJet. Certainly had a turbulent 2019. Such was the moves in its share price. It saw itself relegated from the FTSE 100 in June, only to be re-promoted in December. The net effect of all of that is that over the last year, the shares are up about 24% or so. And as you would expect in a trading statement, the sort of things we'll be looking out for is the level of their forward bookings as well as their ancillary revenues. Another update next week should come in the form of Burberry, and despite all the troubles in its important Hong Kong market, the shares have managed to eke out a 31% gain over the last 12 months. A couple of reasons for that have been the success of its Ricardo collections, not to mention its increasing presence on social media, or brand heat, as Burberry prefers to call it. Also, slightly differing fortunes for what have been a couple of AIM superstars. We've got trading statements due from the likes of soft drinks maker Fevertree. Now, this is a stock which has really gone on a rocket ride, and despite the fact that the shares are down 23% over the last year or so, if you go back 5 years, the shares are actually up 880%. Another darling of the AIM index has been ASOS, the retailer, the online retailer. That's had a slightly more difficult time. Over the last 2 years, the shares are down around 53%, although again, if you take a 5-year view, they've just about managed to eke out a gain of 20% or so. Thank you for watching. Have a great week.